Hi everybody, Marco Carbajo here from businesscreditblogger.com. Today's video we are going to talk about the top 5 advantages small businesses get from banking at a credit union. So for those of you who are just getting started with your business and you're looking for a banking institution, I want to talk to you about the power of using a credit union. And even if you have an existing business and you have a bank account at maybe a national bank, a regional bank, etc., we're going to share with you why it may be to your advantage to switch to a credit union. Okay, so let's get started. So first and foremost, let's talk about the real difference between banks and credit unions. Let's first talk about the structure of a bank. Banks are for-profit. They are catering to their shareholders. So the shareholders, it's all about making money for the banks. Okay, so they're beholden to their shareholders. So shareholders don't even have to bank at the bank. They don't even have to live in the area. They don't have to be within that state. So the banks are serving shareholders. They're for profit. So they're out to make money. Whereas credit unions are not for profit. They're there to cater to the members of the credit unions, you. So if you're a member of a credit union, it's member owned. So they're not out to make money. Any profits that a credit union makes, they pass on to the members. How they do that is they do that with reduced interest rates, better savings rates, lesser fees, etc. So that's the big difference between a for-profit bank and credit unions, okay? Now, at banks, you have your monies insured by the FDIC up to $250K. With credit unions, your money is also insured, but through a different insurer. It's called the National Credit Union Administration. They also back your money up to $250K. So your money is protected at both credit unions and banks up to $250K. Now, with banks, let's talk about customer service. Obviously, that's less of a priority for banks compared to credit unions. Credit unions are much more personalized. They're more relationship driven because you, as a member, you're within the community. You live locally. They're there to service the community. And if you're a business owner, they're looking to cater to small businesses in the community. So it's much more personable compared to a bank. Bank has less emphasis on that personal approach, that one-on-one, that relationship, etc. Now let's talk about physical locations between banks and credit unions. National banks and regional banks have a lot of branches that you can go to, so that's an advantage for them. With a credit union, you may have fewer branches, but sometimes they actually may share their branch via a network of other branches, so they do compensate for that. But if you're a small business owner and you need a local branch, you have access to it with credit unions, but on the national side, they have many more locations. Now let's talk about rates and fees, which this is really big for you as a business owner. With banks, their rates for lines of credit, loans, credit cards are much higher compared to credit unions because remember, banks are out to make money. They're a for-profit business, okay? So their rates are higher. Their fees are higher. They have more fees than a credit union. So they have your overdraft fees are higher, your maintenance fees are higher, etc. So there's lots of fees involved with banks. With credit unions, they have fewer fees and lower fees. Many credit unions don't even have monthly maintenance fees for your checking account or require minimum balances in your account, etc. So that's why I love credit unions. Now let's talk about funding products for you as a business owner. You have loans, lines of credit, credit cards, etc. You even have merchant accounts. So with banks, they have much more rigorous and strict requirements to qualify for lines of credit and loans and cards, etc. Whereas with the credit union, they're much more flexible because remember, it's a more personalized approach, a hands-on approach. They're there to cater to its members, and they want to help small businesses specifically because they're within the community. So they're there to serve you, and they're not so much out there for profit. This is more of a broad assessment. I'm going to get into more details on what a credit union provides you and what are the benefits, okay? So let's talk about what is a credit union. It's not for profit. It's community-based. It's member-owned financial institution. So what does that mean? The members, when you join a credit union, you become part of the credit union, you become a member, and they exist to serve their members. So they're controlled by the people or the members to use their services. Now, what's neat about that is you have voting rights as a credit union member. You get to vote in their volunteer board of directors, etc. They're like banks. They accept deposits, they make loans, they provide financial services. So they are similarities between a bank and a credit union, but one's for profit, one's not for profit. One services shareholders because they want to make money. On the credit union side, they serve the members, they serve you, they serve the community. So they're there to provide great funding products to help grow the community and serve the community. Now, we have a credit union located here, so if you're not sure, is there a credit union near you? You can go to mapping.ncua.gov, and that'll let you know all the different credit unions that are local to you, okay? So, what's not-for-profit? Their goal is to serve the well-being of its members. The profits that the credit union makes are returned back to the members of the credit union, and they do that by having more reduced fees, higher savings rates, and lower loan rates. So that's how they pass on their profits back to the members, okay? So you'll see there's a big difference between how banks operate and what their focus and mindset is compared to a credit union. That's why I love credit unions. Now, they're member owned. So, like I said, bank's primary obligation is to its shareholders. With the case with the credit union, they're there. You are part owner if you're a member of a credit union, so your vote counts. So you get to vote because they elect their board of directors at a credit union. Now, how do you join a credit union? There's different ways to join a credit union. Some credit unions are employer-based. Like, there's like teacher credit unions for teachers, etc. There's some where if your family member belongs to a credit union, you can join. So, for example, if you have a family member that's in the military and they join, let's say, Navy Federal allows you as a family member of a service member. If your family member is in the military service, you can join that credit union because your family member is a part of the military. So that's where you could join based on that. You have geographic location where you have to reside in the area of that credit union to join that credit union. So they all have their different criteria to join, and you also have groups, memberships in a group to join a credit union. So there's all the different factors to join a credit union. So you want to look into that when you find a credit union. What's the requirements to join? And they clearly provide that on their website or when you visit the location. Okay, so let's talk about the advantages for you as a small business when joining a credit union. Now, one thing that I find really interesting is we have so many business owners come to us that are wanting a line of credit, or they're looking for a credit card, or they're looking for a loan. And the first question we ask them is, where do you do your banking at? Well, I've been with this bank, which is, let's say, a national bank or a regional bank, and it's always big banks. And I said, then we asked them, do you have a line of credit with them? Do you have a card or a loan have you had with them or anything? And they had nothing. They got declined. They weren't approved for a line of credit, or they don't qualify for it. So many of the business owners come to us have been banking with these big banks for years and years and years. All their money from the business going into this bank, but the bank's not servicing them. They're not offering them any solutions for the business like a credit card or a loan or a line of credit, even with all that money coming through, because they may not fit into their rigorous underwriting guidelines. So that's where you want to kind of rethink that and say, okay, is where I'm banking as a business owner, is it serving me and my business? Is it helping me to grow? Is it providing the solutions that I need? And that's why I love credit unions, because they have lower fees, number one, okay? They have lower credit card and loan rates. You save money on interest rates. And they're relationship-driven organizations. So they're there to help grow the community and serve the community, obviously its members. So if you're a locally owned business owner and you have your bank account with your business at your credit union and you build that relationship, they're much more flexible when it comes to their underwriting. They're more flexible when it comes to, getting approvals. They may even offer lower loan amounts than major banks do, because big banks don't offer micro loans or small loans where a credit union would. So there's a local approach to getting approval compared to big banks or regional banks, etc. So that's something you really want to take into consideration. And remember, credit unions look at the relationship that you built with them, how long you've been banking with them, They get to know you. They get to know your business, etc. So their business financial products from a credit union are designed for local and small business owners. That's who they cater to. Okay, so that's why I love credit unions. So that's something you want to really think hard about and consider, especially if you've been in business for some time. Really rethink that. Are you getting what you need from your bank? So let's talk about opening a business checking account or a business account with a credit union. Okay, what are they going to want from you? They're going to want your company formation documents. If you've already done this if you have an account with another bank somewhere, like a national bank, then you're familiar with this process. But for those of you who are just getting started, you just formalized your business, you're ready to open a business checking account. With a credit union, you're going to need your articles of incorporation or your operating agreement. And they're also going to want your employer identification number. So bring that EIN letter you get from the IRS that shows what your EIN number is. Now, you'll also need to provide your business license if it's required for your business, okay? They're going to want personal identification, driver's license, etc., basic stuff. You need to complete a business account application, which the bank credit union provides to you, and a certification of beneficial owners. That's another form that credit unions have you fill out. So that's the basic things you need to open up your business account with the credit union. So there's different types of business accounts that you can open up. You have your standard business checking account. That's where your deposits are going to go through. That's where you write checks. You're gonna you have the option to get a savings account for your business. And remember, with a credit union, you can also open up a personal checking account. You can also open up a personal savings account, etc. So if you're looking to do both personal and business at a credit union, that's even better, okay? Because you're building a big relationship for both on your personal life and your business life. So if you might need a personal loan for an automobile or a mortgage, your credit union can help you with there too. Now they also have a business merchant account. So if you're looking to accept credit card payments, some credit unions offer business merchant account. Now what I want to tell you is make sure when you check a credit union that they do offer business products for your company. Some credit unions only cater to personal accounts, and that's all they do. Where many credit unions offer a business checking account, make sure they offer business loans and business lines of credit, etc. Because obviously it doesn't benefit you if you bank at a credit union that doesn't offer those solutions. Okay. You have your business debit card. That's your debit card that you use to make purchases. The money's taken out of your checking account, so you can use it anywhere Visa, MasterCard is accepted. So that's standard with checking accounts for the business. You get a business debit card. What's unique, though, is credit unions also offer business credit cards. They offer loans and lines of credit for businesses. Okay, so these are all the types of things you can get from your credit union. Then you're like, well, major banks offer this too. Absolutely. But like I told you have all those advantages with a credit union that banks don't offer. Okay. They're that more hands-on, personalized approach. They cater to small businesses. They're much more flexible. Let's talk about also when open up a business checking account, what's important for you when it comes to your credit union is what do they actually look at when you're applying for a loan or a line of credit or even a credit card. So some of the things I want to make sure that you're aware of with your business checking account is they're going to look at the age of your account. How long have you been banking with the credit union? Because remember, this is part of their relationship-driven focus that they have with members. So when you're looking for funding as a business, they're going to look at your deposit activity as a business. They're going to look at the deposits coming in. Is it a regular deposit, weekly, daily, monthly, etc.? So they're going to look at how much revenues are coming into your business. They're going to look at your average daily balance. So it's always good to have a sizable balance in your account ongoing because it shows that your business has, good reserves. And then that deposit activity is the cash flow coming into the business, which is good. It shows cash coming in, revenues coming in consistently. They're going to look at your balance rating over a 90-day period, and they're going to look at your NSF history. Have you ever had non-sufficient funds, bounced checks, etc.? That's something you totally want to avoid. So those are the key things they look at. But the other main thing they look at is any existing and or previous loan or line of credit card history that you have with them, with the credit union. So let's say you have a personal checking account with the credit union. Now you also have a business account. But let's say you've had a personal loan with them, or you have an existing auto loan with them, and you're making your payments on time, etc. That's something they take into consideration, is that history. The other thing they look at, let's say your business has a business credit card with the credit union, and now your business is looking to get a line of credit. So they're going to look at, okay, that your business has the business credit card. How are you managing it? How are the payments, etc. So they look at all that relationship activity through the business and personal when you as a business are applying for additional funding product, etc. Okay, so those are really important things that can take in consideration. And what I do encourage you to do is you have to think about that as a business owner, when you're trying to get a loan or a line of credit. Yes, the credit union may look at your tax returns for the business. They may want to look at may do a personal credit check. So as you know, banks do that as well. But they're much more rigorous. They may want P&Ls, financials, etc. Whereas a credit union, it all depends on your relationship, how long you've been banking with them, what other type of history do you have with your credit union. So they may be more flexible and may just look at your business tax returns but not pull a personal credit check, or they may just do a soft credit check, etc. So these are just things you want to realize. The benefits of credit union is it's a much more personalized approach, and it's a much more local approach compared to a bank. Okay, so with that, be sure to check this also video. I recommend if you have a bank account, whether it's with a bank or a credit union with 6 months of activity, and you have good revenues coming in, this is just a way for you to get a line of credit. So watch this video here. I've done videos on this before, but they now also offer term loans, which is really cool. So with that, if you found this information helpful, please give us a thumbs up and click subscribe so you're getting notifications anytime we put out a new video. And check out our main website, businesscreditbuilders.org. There you'll see our done-for-you funding programs that we offer, as well as our step-by-step business credit building system. So make it a great day, and we'll talk to you really, really soon.